We have more now on that breaking news on Uber that crossed just a few moments ago. The ride-hailing giant's shareholders are said to have agreed to sell a stake in Uber to an investor group led by SoftBank Group. Joining us now from San Francisco to explain is Bloomberg's head of global technology coverage, Brad Stone. So, Brad, for those of us who don't cover this quite as much, we had a general sense that SoftBank was trying to buy someone. There was a tender going on. Tell us what the news is and why it's important.
Right, David. This is a process that's really started way earlier this fall. SoftBank founder Masayoshi Son, taking advantage of really the year of turmoil at Uber, very opportunistically, put an open offer to buy shares from Uber investors at a significant discount. But the deal came with some additions, reform in the governance of Uber, obviously much needed, a $1 billion investment at the current $70 billion valuation. But that secondary offer was at a steep discount, about a 30% discount. And what we're learning today, and today was the deadline, that enough of those early investors, Benchmark Capital, Menlo Ventures, probably Travis Kalanick, who still owns 10% of the company, have offered to sell their shares to SoftBank, making SoftBank one of the biggest investors now in Uber.
Okay, that's great. That answers one of my questions. Did they get enough shares tendered to match what SoftBank was trying to do? What you just said is they did.
Yeah, Masayoshi Son wanted about 1/5 of Uber, about an $8 billion investment, and the news today is they did reach that threshold, which means the deal can go forward.
But Greg, as you said, this was at a substantial discount to the last valuation that we heard about. So what does that tell us about the Uber shareholders? That they'd rather get their cash, thank you very much, even if they leave some money on the table?
Yeah, David, you're exactly right. Liquidity. You know, this has been a long, hard journey for the company. Dara Khosrowshahi, the CEO of Uber, has said 2019 at the earliest for an Uber IPO. This is the soonest, best chance for liquidity to sell some of those shares, to lock in some of those gains for Uber investors who have been on this ride now, not only for more than 5 years, but who have been through really hell over the last year, as you know, the resignation of Travis Kalanick, all the controversy and turmoil over the last year.
Greg, are these shares worth more for Masayoshi Son and the SoftBank people than they are to the Uber shareholders? Is there something they can do with this interest that maybe the current shareholders can't do?
Yeah, that's a good point. SoftBank is obviously very optimistic about the ride-hailing sector. It's an investor in Ola in India, in Didi in China, in Grab in Southeast Asia. And, you know, a lot of the competition in this sector around the world has been destructive. I mean, Uber has lost, $4 billion this year, really on the severe discounting in a lot of these competitive markets. So what SoftBank can do is, what Uber and Didi already did in China, where they merged operations and Uber left China. They can like create détente in these very competitive markets. We might see Uber recede ultimately from Singapore, from India, maybe from Brazil at some point. And some of this discounting goes away. These companies are profitable, and maybe all boats rise.
So if in fact there's some possible grand alliance or at least coordination, confederation that is possible here, what does it do to Lyft's aspirations overseas? Is this a bad day for Lyft?
I don't know. Lyft has had a tremendous run over the last year. It has been the beneficiary in the U.S. of all the turmoil at Uber. They've raised money on Uber's weakness. So, yeah, Lyft might have been the recipient of SoftBank's interest had this deal fallen through. But I think what the last year has shown us is that there's still plenty of interest and plenty of opportunity. And Lyft's reputation has benefited so much by the problems at Uber that, maybe not the greatest day for Lyft. Their primary rival is seeing an infusion of capital, but it's hard to call Lyft a loser after the year it's had.